People aren't very good at forecasting now. Even though everyone knows about the halving, nobody figures about liquidity. So they kind of take current market conditions and say, well, if you remove the supply, everything will be fine. But what actually happens is because liquidity comes into the markets, demand starts exploding at the same time as supply. And it always takes everybody by surprise. Now, it's not a one-day event. It's not like suddenly you wake up on the 20th of April and Bitcoin's up, 50%. It tends to kind of chop around that period because people are like, well, it's in the price. And then before you know it, by June, Bitcoin's at 85, 95,000, something like that. And then you're off to the races, and then there's more demand comes in, because remember we talked before that as price goes up, as number go up, more people get involved.
Right.
And there's less supply, so it starts to get really reflexive. So it kind of gets really squeezy, and that goes on for a period of time, usually about a year and a half after the halving.
Recently, Real Vision CEO Raoul has given his updated Bitcoin forecast and insights regarding the upcoming halving and the asset's tremendous price action driven by the spot Bitcoin ETFs. According to Pal, the massive impact of liquidity is one of the most important factors to consider when forecasting the effects of the upcoming halving on Bitcoin. Because when liquidity enters the market, demand increases alongside the reduced supply, causing a combination of a supply and demand shock that is bound to skyrocket Bitcoin's value into new heights. Let us now watch clips of Raoul as he shares his latest insights. While watching, please give this video a thumbs up, subscribe to the channel, and enable post notifications for more similar content. Be sure to stick around until the end of the video, where Pal reveals why Bitcoin will surely reach greater heights. Thank you for tuning in. We hope you enjoy it.
Because Bitcoin is basically a share of a network, the more people who join the network, the more value goes up. So as the ETF brings people in, as people start fearing the governments and their deficits, they start looking for different solutions. One of the reasons gold has been rallying is the same. So what we're seeing is this was the most successful launch of any ETF in all history, which tells you it's not just an ETF. It's that the idea of Bitcoin itself is resonating with people. They kind of know they're getting screwed somewhere by the system, and this feels like a way of getting higher returns with more volatility, but it kind of saves them from what is going on. So let's assume that this is the largest ETF launch in history, and a lot of newbies have come in. Well, it's happening at a magic time. The magic time is what's known as the Bitcoin halving. So new Bitcoin comes onto the market via miners, Bitcoin miners, who undergo huge kind of mathematical calculations to produce a Bitcoin. There is a fixed number of Bitcoins that can be produced each year. So it's a competition to produce them. So you need a lot of computing power. And then every 4 years, the algorithm of Bitcoin itself halves the number. So if there were 100 Bitcoin being produced by miners every day, whatever the number is, right now, after April 20th, it goes to 50. So there's more people coming into the market, which is new demand, and new supply is shrinking. So all the time, the only supply is really sellers of Bitcoin who hold Bitcoin right now. But Bitcoin's one of these weird assets where 80% of all holders just hoard it. Like you and I, we just don't do anything with it, we just hold it. And so there's really only 20% that's available for trading. So listen, what's going on is the same story that's been on for a while. We are in the crypto macro spring to summer transition. That is when liquidity starts coming into the system. It happens to correspond with the US election cycle, because obviously politicians can't help but give out candy around election time.
Yes, of course.
It's also the Bitcoin halving time. So Bitcoin halving reduces the supply. And then there was the ETF. So basically, we've got a perfect setup of liquidity, plus new demand, plus reduced supply. There's bear markets in all assets, and this is just an asset. And it's a very reflexive asset, so it tends to over-exaggerate the moves. But there is a good question within that, is the severity of the downside markets, that in Bitcoin were classically 80%-ish. Last one was 65, so it was less than others. Is that changed because of the ETF? Well, obviously, many of the ETF holders, faced with their first round of volatility in the space, will panic out, much like everybody else, but that's fine. But I think there's going to be a bunch of the millennial cohort who are going to put it in their 401k. And that's every 2-week buying regardless. So my guess is that it'll dampen the volatility to the downside. So next time around, it won't be down 85, it won't be down 75, it won't be down 65, but maybe it's down 45, 50. I mean, I continue to be very bullish this year and very bullish for most of next year. People aren't very good at forecasting now. Even though everyone knows about the halving, nobody figures about liquidity. So they kind of take current market conditions and say, well, if you remove the supply, everything will be fine. But what actually happens is because liquidity comes into the markets, demand starts exploding at the same time as supply. And it always takes everybody by surprise. Now, it's not a one-day event. It's not like suddenly you wake up on the 20th of April and Bitcoin's up, 50%. It tends to kind of chop around that period because people are like, well, it's in the price. And then before you know it, by June, Bitcoin's at 85, 95,000, something like that. And then you're off to the races, and then there's more demand comes in, because remember we talked before that as price goes up, as number go up, more people get involved.
Right.
And there's less supply, so it starts to get really reflexive. So it kind of gets really squeezy, and that goes on for a period of time, usually about a year and a half after the halving.
While Raoul Pal maintains a bullish outlook, he believes that Bitcoin's price increase post-halving wouldn't be immediate. Instead, it would fluctuate before experiencing significant growth. As the price rises, more people become interested in Bitcoin, leading to a feedback loop of increasing demand and decreasing supply. He predicts that this dynamic will persist for about a year and a half after the halving event. Let us now return to Raoul Pal's interview, as he explains why Bitcoin is superior to all other assets and is positioned for tremendous success.
Every single asset on Earth versus Bitcoin since 2012 is down 99.9%. None of us expected $10 billion of demand in 6 weeks or whatever stupid number it was, right?
Okay.
It was...
All right, but
we kind of thought it might do it in a year, because that's what gold did, GLD in its first year. But it did it in record short amount of time, and it doesn't seem to be slowing down. So, no, it wasn't priced in. We didn't realize how many ordinary people, RAAs and investors, are starting to realize this issue that you're talking about is I need something to protect my wealth into the future and maybe make me money, not just protect my savings, but I want to make some money too. And this does that. As it says, if you hold Bitcoin over a few years, you can buy something like 5 times as much S&P 500 just in a few years. So your purchasing power is going up dramatically every year you own it. And that even takes into account the fact that it goes down every 4 years, a significant amount. Over the long run, it doesn't really matter. Think of why most people have bought gold. It's to protect themselves from the action of central banks. It has proven itself over several thousand years to be a way of having a store of value. Bitcoin is that for a digital age. Okay, most people know that story. They don't understand the other side of the story. Is why does nobody feel as wealthy as they thought they should be? Particularly if you're a bit older, you're like, why are my savings not as much as I thought they would be, or I can't afford as much? Right, that's the big conundrum. And the fact is that particularly since 2008, when we broke the world because of debt, we have been using the printing of money to try to paper over the cracks, because economic growth from an aging population is slower. We don't have much productivity because people are retiring. And we've got too much debt, so people have to service the debt. So the central banks have been doing a bit of magic, which is printing of money. At one point it was called quantitative easing. Now they don't do that as much anymore because everyone knows that game, because that's the money printer go burr. So what they do is they inject liquidity into the system, whether through all these weird things you hear about, like reverse repo market, stuff like that. Basically, it's to hide the printing of money, put it into the system. When you look at that on a globalized level, because everybody's doing it, you're debasing the level of fiat currency. And what that means is your dollar today buys you less assets tomorrow. Now, why do we buy assets? We buy assets to save money for future consumption. So if I were to buy gold today, it's because I want to release it in future and I want its purchasing power protected for it to go up. Now, when you look at what's happening with the debasement of currency, they're debasing currency by about 8% on year on average amongst all the global central banks. Add in about 3 to 4% global inflation, you have 12% hurdle rate on your assets before you actually make any money. So your savings, you need to be making 12%. Now, since 2012, the S&P 500 has made 12% annualized. The NASDAQ has made about 24% annualized. So tech stocks have helped. But crypto is the one that really offsets this and allows you to generate a lot of wealth. So if you're in your 50s like me, or your 60s, and you're thinking, I just don't know if my retirement savings are enough, then a small allocation to an asset that does 150% a year will compound massively and will help you in having purchasing power in your retirement, because nobody wants to be broke when they're 85 years old. That's everybody's biggest fear.
In recent years, Bitcoin's behavior during Asia trading hours often led to dips, but a significant shift occurred following the introduction of spot Bitcoin exchange-traded funds. Since the launch of spot Bitcoin ETFs, Bitcoin has witnessed most of its daily gains occurring outside of United States trading hours. This reversal from the previous trend, where gains were concentrated primarily during US trading hours, is a unique opportunity for traders, according to analysts. Marcus Thielen, CEO of 10x Research, suggests that this new trend enables investors to capitalize on frequent small profit margins. Traders can take advantage of this information and buy Bitcoin ahead of the US trading hours and sell a few hours later. Thielen explained to Cointelegraph. On April 4th, Bitcoin surged approximately 2.6% outside US hours, while experiencing a mere 0.6% increase during US hours. Bloomberg ETF analyst Eric Balchunas highlighted that the majority of Bitcoin's 40% gains since the introduction of spot Bitcoin ETFs occurred outside regular US market trading hours. Thielen further explained that investors, including those from different time zones, often anticipate surges in ETF inflows by purchasing Bitcoin before the market opens. As Thielen stated, we also noticed through our data analysis that Bitcoin tends to rise during the 4 hours before US ETFs start trading on that day, a sign that there is likely front-running of the ETF flow occurring. Although Bitcoin's price has fluctuated between $64,940 and $71,256 over the past 7 days, Thielen highlighted that US investors frequently exploit the market spread between the spot market and the futures market. Thielen elaborates that the buying flow during US trading hours appears mostly arbitrage, buying Bitcoin spot ETFs but selling CME-listed Bitcoin futures as hedge funds pocket the futures premium. How do you anticipate Bitcoin's price behavior in the months following the upcoming halving, considering the factors discussed by Raoul Pal and other analysts? Feel free to drop your thoughts and analyses in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates on crypto and global finance, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support greatly encourages us to continue providing in-depth content and discussions. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.